Good evening, investors. In our today's episode of 26 September 25, we will discuss how to navigate this frustrating sideways market. I will provide my view on this market for upcoming weeks, and we will also discuss that is it a good time to invest in lump sum or not. I will try to make this video short, cutting all the noises, and will try to present my commentary basis some data and facts. So today, Nifty down 0.95%, mid cap worse 1.94%, small cap more worse 2.14%. You might think that the reason is pharmaceuticals due to Trump tariff announcement. You are partially correct, but the main reason was IT, almost 2.45% down today. Now, if you track global markets, then you might have noted that yesterday Indian ADR, Infosys, and Wipro were almost down in the range of 2 to 3%. Now, ADR stands for American Depository Receipts. You can think of them as Indian stocks trading in US stock market. These ADRs are a very good leading indicators which tell us how Indian IT stocks will behave next day. Now, the question is it due to H1B visa fees hike? The answer is no. This is not a new news for the market. Yesterday, Accenture had announced their Q4 results. Now, why Accenture results is a very big factor to decide market trend, let's understand this. Now, Accenture is a very big global IT consulting player, same like our Indian IT companies, and results and commentary and management guidance of Accenture are a very good leading indicator of how Indian IT companies will perform in their next earnings season. Accenture, since it is an Irish company, their Q4 is July to August. So the question is, how did it go? Now, if you are a simple news headline reader, then you might have seen this headline that Accenture Q4 has beaten the estimates. Now, this is not the full picture. Actually, result of global companies should be seen with some accounting adjustment, which we call as GAAP, which is generally accepted accounting principles. Now, as per GAAP, EPS for fourth quarter has actually decreased by 15%, and for overall year it has given a growth of 9%. Now you will say, just tell us whether the results are good or not. Friends, actually the problem was not in the result. The problem was in the guidance which was given by the management. Now in the previous slide, you have noted that company has reported 9% growth for FY25, but going forward FY26 management has reduced guidance by half to almost 2 to 5%. The main reason they have given is headwinds in US. Now there is a very high probability that our Indian IT companies will also post some muted results. Now if you have seen my past few videos, then you might have noticed that I have mentioned that the only factor which can now push market forward is good earnings season. Our Indian earnings season starts with result of IT stocks, and looking at all this, it is not expected that we are going to get a good start. So this is a very big negative news for the market. Plus pharma also joined the party, 2.14% today. Reason, again, you all know that Trump has announced 100% tariff on branded or patented pharmaceuticals from October 1st. However, our Indian pharma is more of generics play rather than branded or patented drug play. If you look at the portfolio of the listed pharma company, then you will note that generics have more contribution compared to specialty. Sun Pharma has a good exposure to branded and patented drugs, but they have manufacturing facilities in US as well, and as per the announcement made by Trump, these tariffs will not be applicable for the companies who have their manufacturing facilities in US. So Sun Pharma might shift some of their manufacturing to US. I don't know what are they going to do. It's their business call. But the main reason was not this news. The main reason is that he has not given any clear guidance for generics. And now there is a very high probability that he might target generics in future as well. That's why Nifty Pharma was in pressure today. Now comes the $1 billion question. What should investors do in this market? Now, if you look at the trend, we are at the same situation where we were few months back. In September 24, market made a top. Bad Q2 results pushed market down. Market recovered in November, December. Then again, bad Q3 results pushed market more down. In July, we were moving to cross our previous high, but poor June results have pushed our market down. Now again we are standing at this point waiting for September quarter results. FIIs were selling at this point and FIIs are also selling at this point as well. If we look at Nifty 50 PE ratio chart, then during September and December results of previous year, Nifty was trading at a valuation of somewhere between 22 to 24. Currently, it is trading at a valuation of 22. Now, earning sentiments for this quarter are not looking good, at least for the start. Plus, valuation is also not very comfortable, so there's a high probability of market coming down more. So, if I have to summarize and make a view on market, then first question, is it a good time to make lump sum investment? The answer is no. In next quarter, we expect market can come down more and can then give us good opportunity to make lump sum investment. Before 9th October, I believe market will move in a sideways direction. You will see more ups and downs but no clear direction. Why 9th October? Because on 9th evening, TCS will start earning season by posting their results, which is most likely to be negative, and thereby investors should wait for earning season to start. Also, if you look at historical trends of Nifty 50 PE, then currently we are standing at a PE ratio of 22, and this table shows that if you invest a lump sum amount below 22, then your next 3-year returns would be positive. On the contrary, if you invest above the PE of 22, then there is a high probability of getting negative returns. Now, as we discussed, there is a high probability that we might find Nifty at lower levels of PE and can get a good chance to earn more returns. Now, I can be completely wrong. So, what my plan would be, I will not sit on 100% cash. I will try to stay invested by 60 to 70% in equity and will keep 30 to 40% cash in case I get a good opportunity in next earning quarter. I might rotate some money to put in some high growth stocks, but will not infuse any fresh cash before this earning season. So that's it for investors today. Thank you for watching video. I will meet you in next video.